Good afternoon, everyone. My name is Ron Wirtz. I am Regional Outreach Director for the Federal Reserve Bank of Minneapolis. I hope I'm supposed to be going here. I've been listening in on the conference, and it's been really interesting. David, I actually would love to recommend you as like a color commentator in the Fox football booth. I think you'd be great at that. I'm really interested in following, and I appreciate the opportunity to follow the governor in this conference. I hear many of the same stories and the same narrative as the governor was talking about. You things are really positive, but I'm also someone who swims in a lot of data, and I'd like to share some of that with you that offers, I think, maybe a little bit of a different perspective on how the South Dakota economy is doing right now. So let me launch right into this. And Marianne and David, just so you're aware, I'll try to end at 3:40 or between 3:40 and 3:45. So I'll try to really accelerate this. So I apologize. I have a lot of content to share. I have a much smaller window. So I'm just going to try to keep it at a 30,000 foot level. Views expressed here are mine and not necessarily those of the bank. Federal Reserve 9th District, if you didn't know, we're supposed to be paying attention to a district that runs roughly western Wisconsin over to Montana, including South Dakota. So basically what I will tell you is that from a pandemic economy standpoint, there was a really strong bounce back in Q3. What we're seeing is that there's been a softer Q4 and that employment is flattening. South Dakota has been, I think it's really accurate to say South Dakota has been doing well among states. The bad news, it's a pretty modest bar and there have been some COVID trade-offs. In general, what I'd also like to show you is not just in South Dakota, but in general, what we're seeing is that small firms and certain industry sectors are bearing a heavier cost in terms of the pandemic. So I'm going to give you a lot of detail. I'm going to share this PowerPoint with the chamber, and they'll be able to share it later. So real quickly, in terms of like gross measures, gross domestic product shows us that in Q3 we saw that big bounce back. The problem is for states, we don't have anything better than Q3. That's the most recent. In terms of the nation, we have the Q4 measure. And we see that there is that softening, and that from a total standpoint, we are still several percentage points below where we were pre-pandemic. In terms of construction, what we are seeing is that South Dakota construction sector has been a little bit more resilient than other states that I'm looking at. There has been a drop off. We're still above levels that we were at a couple of years ago. In terms of employment, I think this is one of the more important charts. So as you can see, South Dakota here is the red line, okay, and North Dakota, Minnesota below it, as well as the U.S. So South Dakota has been pretty solidly ahead of the pack in terms of employment recovery. This is an index, so this is basically just rate of change. 100 would be back to normal, back to pre-pandemic. So everybody's still considerably below pre-pandemic levels, and probably more concerning is that everybody's trajectory lines have really flattened out, including in South Dakota. Equally important, as the governor accurately pointed out, South Dakota has one of the best, actually the best unemployment rate in the nation. That's what's called the U3 measure. There's another measure called the U6 measure. It basically, there's a definition at the bottom of this chart. Basically, it's a little bit more expansive, a definition for those that haven't looked for work in a while but want to or are working part-time. And what we see here is that the South Dakota U6 measure is significantly higher. So we think there is a lot more labor slack in South Dakota than maybe what that official measure shows. That's the same story in other states, though. Minnesota's U6 measure is actually closer to 10%. So again, South Dakota doing better on that measure as well. Unemployment claims, this is something we pay an awful lot of attention to. We know that there was the huge spike during the first part of the pandemic. Things have come down and settled in, I think, a little bit. The thing I want you to take away from this chart, levels are increasing, and they are higher both from initial claims, the people that ask for assistance, and then it's also higher for those that are receiving assistance than it is normally by a fairly significant margin. And this chart doesn't include those that are also on those new benefit programs that were created in the stimulus packages. And that can add anywhere, depending on the state, that can add sometimes anywhere from 50 to 100% more in terms of people receiving benefits. So we know that there are a lot of people that are not working as they used to be. This is also something that I think you'll have to pay an awful lot of attention to going forward. So basically, we know that labor force participation is really important in terms of growth. And what we're seeing is that there is not only a long-term decline in labor force participation. We thought it might be going up actually right before the pandemic. It kind of looked like it wanted to. But what we're seeing is that during the pandemic, there's been a lot of friction in labor markets, and we're seeing people literally just drop out of the labor market. So the people that are included here are not the people that are included in the previous chart with regards to unemployment benefits. But the thing is, even these measures don't really give us as much information as we would like about what's happening at the firm level. So the Minneapolis Fed is doing an awful lot more outreach to the business community. We've done 15 different surveys just since last March, and we've gotten over 12,000 responses, again, across that 6-state region that I showed you earlier. Right now, I'm going to give you some results to our general business survey. We conducted this in mid-January, and we do it across the 6-state region. We had over 1,000 responses to this, and a quick shout out to the South Dakota Chamber. They've always been a long-term partner with us, and I really appreciate their leadership in this. We've also managed to include a number of the local chambers who send it out to their members. If people are listening here and they're familiar, I'd love to get your responses in the future. If you've already responded, I appreciate the insights that you give us. We really pay a lot of attention to feedback from the business community. So again, in terms of, because I only have about 90 responses from South Dakota, you have to take these as a decent snapshot, but this is not scientifically valid. Basic takeaways, what we're seeing is that a lot of firms have been negatively impacted during the pandemic. That's not a surprise. South Dakota firms tend to be less negative in terms of their revenue trends and other outcomes that are related to revenue. Size, sector, state, those are really big factors across that 6-state region. That's really what we're worried about. We see that those are very big factors in terms of how firms are performing. So real quickly, how to read this chart. Red means bad, green means good, deeper red means worse, okay? We asked firms essentially to compare recent revenues in Q4 to 3 different time frames. The same quarter last year, that's the top bar. The previous quarter, quarter 3, that's the middle bar, and then what their expectations for Q1 are compared to Q1 of last year, 2020. And basically what this chart says is that right now on net, most firms are seeing some kind of negative revenue trend. And that does kind of fly in the face of some of the things that you've probably heard today. I'll have a little bit of an explanation on why that is. So we also ask firms to identify what sector their business is in. And generally what we've seen, this has been a pretty consistent finding, is that we are seeing that consumer-facing kind of crowd-dependent firms, those that deal in accommodation and hospitality, entertainment, retail, those have seen very negative revenue trends really since the start of the pandemic. Geography also matters, so we ask what state they're from, and as you can see here, South Dakota, in general, it has, and I would say throughout our survey, generally sees better results than respondents from other states. There's a couple reasons for that. First, I think you probably are doing a little bit better, but composition in terms of respondents also matters. And what we see is that in Minnesota and UP and the UP of Michigan, those that saw a little bit worse response, they tended to see more respondents in those sectors that were hurt: accommodation, retail, entertainment, things like that. South Dakota, on the other hand, had more respondents in the banking sector. And that sector, as the last chart showed that I kind of had to run through quickly, that sector is by far the healthiest in terms of its response and its positive revenue trends. So composition really matters. I think if you were to wait for all those factors, I don't think there's any question South Dakota would still come out slightly ahead, but I think you'd see a compression of how different the states are from one another. More than anything, what I would take, if you take one thing away, is that I think it kind of explains the negative revenue trends, is that size matters. Size really matters. This has been the most consistent finding in our surveys, is that small firms have done very poorly during the recession. Large firms have done significantly better. You see not only more firms that are seeing growth, you're seeing fewer of them that are seeing negative revenue trends. And again, in terms of respondents, as I think how you take it, how you should think about it is, this survey is not necessarily a great measure of the overall economy. It's a very good measure of how firms from a representative standpoint are doing in the economy. How you think about that is large firms have a larger share of overall revenue, overall output in the economy. They have a larger share of overall employment in the economy. So if larger firms are doing better, that actually means our economy is probably doing a little bit better than what the findings of this particular survey suggest. But it is pointing out very clearly small firms are struggling during this time, and that includes in South Dakota. So I would ask you to be careful because the sample sizes in some of these categories are really small, but generally speaking, you see the same outcome in South Dakota as you see in the results overall. The smaller you are, the more likely you are to have seen a negative revenue trend. Same with, generally speaking, same with workforce. The one thing I would say with workforce that we are seeing is that we've seen some negative workforce trends leading up to now. There is positive sentiment going forward for Q1 in terms of workforce. There are lots of challenges. We don't have to talk about this. I think you already realize there. We just basically asked people or asked firms to identify which challenge. In South Dakota, the biggest challenge, labor availability. Outlook also positive, and more positive in South Dakota. I think likely it's because we have vaccine regimens out there, and I think that is giving people hope, quite honestly. I think not surprisingly. If there's any trade-off, I think everyone in the room is familiar with this. Because of the economic openness in South Dakota, there have been, I would say, more negative outcomes in terms of some of the COVID measures. So South Dakota is on, I would say, the wrong side of this particular measure. Those other states that are on to the right of it are all eastern seaboard, with the exception of Mississippi. That's where COVID came in first, I think, and states probably didn't have much of a plan of anything. Again, I think there's trade-off. I think some of the surveys that I watched during the earlier part of this suggest that the state's very comfortable with its approach. So I think these are just the trade-offs. Whether or not you decide to try to protect the economy more or protect people more, I don't know that there's been a great I don't think there's an easy answer to that, and I think South Dakota seems very comfortable with its approach. So quick takeaways. Again, right now we're seeing that Q4 was slower. We don't see that changing right now. The fiscal stimulus probably is going to help for a stronger Q1. What's not clear is after stimulus, what's happening after that. After the sugar runs out, are we going to be in a place where we can organically grow again? Again, I think the slowing is likely. We saw a big surge in infection rates. We have seen a very clear connection between infection rates and speed of the economy overall. It's not a one-to-one, but we've definitely seen patterns, especially in consumer spending, that reflect that. Unemployment rate is low, and it's getting low across the country, but there are a lot of other metrics: the unemployment claims, the labor force participation, the U6 rate. I would say that those are other measures that I think suggest there are other labor problems that we're going to have to deal with. Small firms in certain sectors really have been hit a lot harder. I think there's a lot of positive sentiment with regards to hiring. It's going to depend on whether workers are going to make themselves available, I think, and overall positive outlook. In terms of getting to post-pandemic, I don't know how far that is away. I hope the governor's right in that the worst days are in back of us. I'm not ready to say that. I think given some of the virus variants, slower than we would like vaccine delivery, acknowledging that South Dakota's done a great job in getting its out, but in terms of having enough doses, getting it out there as quickly as we can, I think we have months before we get to the other side at the very least, and we've seen that this can ricochet, this can boomerang in ways that we don't expect. So my hope is that the governor is right, and I guess these are the things that we're really tracking on a daily basis, and I'm really pleased to be able to come and visit and share some of this information with you. I'll be sharing this slide deck. There's probably a lot more to glean from this, but I did want to take the chance just to say thanks for having me today.